Hello friends, I bring to you a video on the things to look out for when you are trading pullbacks. Now, what is a pullback? A pullback basically means that the price is progressing, it's going up and up or it's going down and down, and it's away from the moving averages, and then suddenly the price comes down towards the moving average. Now, I've got Cochin Shipyard here. I'm on the daily time frame, and if you see here, the price seems to be accumulating. This price is in an accumulation phase and is closely hugging the 9 and the 20 EMA on a daily time frame. Sometimes goes below it, above it, below it, above it. And finally, the price breaks through the 20 EMA and basically comes to rest on the 50 EMA. If you look here on this red candle, the low is 716, which is quite below the EMA 100 as well. It's basically come to rest on the EMA 100, the 9, the 20, the 50, and the 100. So it has basically gone even below the low of the candle uh, has gone below the 100 EMA, and then finally it closes above the 100 EMA at 730.8, which is around $4 and some change above the EMA 100. Now, the price was in a consolidation and you got here basically a, a good big red candle. And if you see here basically, if you look at the open and the high, and there is a bit of fluctuation there, and as well as the low and the close. So the price did go up. The bulls did try to take it up, but no joy. And the price then, the bears pulled it down up to 716. But again, you almost have almost a 2% upswing to close at 730.80. Now, if you look at the volume is also almost twice the 20 period volume. So, okay, suppose you had this stock on your radar because you watch a couple of hundred stocks, or you have a scanner somewhere and you see that this stock, and the stock just comes in your radar, like it has come on mine for this video. Now you have a sort of a bearish candle, even a bearish engulfing, you can call it. Let me zoom in so that you can see it. So it's kind of a bearish engulfing candle, although it's not engulfing any because it's a drop down. But if you see here, the the volume is above the 20 period moving average. 20 period here means the last 20 days volume. It's more than that. So the bears are in control here. Now what happens the next day? Next day, you have something like, if you look at the open and the low, and again the high and the close, there is some sort of fight back coming in from EMA 100 from the bulls. And it's closed up at 10%, and the volume is 1.5% plus, 1.5x plus. Look at the volume 20, it's on the left side of the chart, 3.714 mil compared to 2.016 mil, meaning it's around 1.5x plus. So that signifies that the bulls are not ready to give up yet. There are a lot of traders, investors in the market who feel that the price is retraced after a long time. It's a good value buy. We'll be looking at the fundamentals, those who are into fundamental investing. And technical traders will be looking at the fact that the bulls have given a fight to the bears and the prices of the EMA 100. So they'll go in, they will decide whether they should go in for a buy or not. Now, I don't know about the others. Let me reset the chart. I don't know about the others, but I wouldn't go long here. People, there are all sorts of traders. There are newbies. There are traders who are not successful. There are traders who have their own technique of doing things based on their own life experiences. By life experiences, I mean trading experiences. So if they decide to go in for a trade here, it's up to them. Who am I to question? If You were my student, I wouldn't ask you to go here. Why would I not ask you to go here? Let's look at the close. What is the close? Let me reset the chart once again. Yeah. Now, what is the close here? Close is close here is you had this you had this uh, so you have this close here, and if you look at this candle, the volume may be 1.5x, but just look at the close. The close of the bullish candle, one, it's an inside bar. Basically, it's not crossed the bearish candle. Two, the closing price of the candle is below the 9 and the 20 EMA. So I would not I would not trade here. I would not ask my students to trade here. Now I would basically wait and watch. Let's look at this one. The other candle, once the other candle has closed, I wouldn't have taken a trade, so I'm watching, right? The day 15th March has ended. Now, what do I see here on the daily time frame? Look at the open, look at the low, look at the high, look at the close, look at the volume. Volume is 11.8 mil. So it's 4x plus, right? It's 4x plus. Now, look, the volume is good. The candle has closed above the 920, 50, and the 100, obviously. And I would go for a trade here because this is broken out of consolidation. And I would keep my entry point above the high of the candle here. So let's keep it at 9.5.5. So I'm going in long here. And where would I keep my entry? Now, this is already 10.71 plus. Already given a very huge move, right? So I'm not going to do something like go below the swing low here because then the stop loss will become gargantuan. It will become so much that you will not be a swing trader anymore. What you will be is an investor or a positional trader. So let's come here and change the color. And what is the swing? The low here is 788.60. So let's make this 788. So I'm going to make this 788.60 paisa buffer. Of course, if you want to be conservative, you can go 1 ATR below the low, but as I said, you're already 10.71% up. So there is a limit to how much stop loss you should take. Unless you're a positional trader, you plan to trade for 6 to 9 months, then you can give a 15-20% stop loss. Otherwise, it's just foolhardy because you're not going to get even 1.1 is to 1 here. Your R multiple will not be even 1 is to 1 or 1 is to 2 because it's going to take a long time to get 20%. So now we've come here and the price has started consolidating because stop loss is not hit. As you see, there are small consolidation candles. So this is basically nothing but rally base. And then again, you have a rally here. Again, you have 11.7% up. Now, I don't have the news here. So I don't know whether there is a news, whether there is some trigger for this. But price has gone up. And price has gone up again by another 11%. So we are still in the trade, and as we see, right now the 9 and the 20 are touching, but you have the 50, the 100, and the 200 slightly sloping upwards and quite decent at that. Then again, you have something like a rally based rally, and price goes on and on. Now, what should be your target here? Your target basically, since price here, let me zoom in on the candle, on the chart. Let's go with the 5-year chart. So Let's go in. Let's go in with the 4-hour chart. Okay. So this 4-hour line that I've done, because I was monitoring this chart earlier, is not because of something that happened earlier. That's what I was searching for when I zoomed in on the chart to go left back into the past. This 4-hour line is basically a resistance turned support. So if you see here, there's this red candle here, and there is obviously it's acting as resistance. And now going forward, it is also kind of a support now. Of course, it's broken through, but then either the price will go up or go down. So forget this 4-hour line here. What we are, where we are currently is that we have taken a trade here with a nice candle, huge volumes, broken out of the consolidation, and we are still in the trade. So the things to watch out for is when you're going in for a pullback trading is whether there is an appropriate chart pattern. The chart pattern that we had here, there is no chart pattern as such, but the candle has come with huge volumes. And if you're looking at other indicators, then so be it. But the price is closed above all the moving averages like 9, 20, 50, 100, 200. And all the averages are sloping upwards. So we've taken a buy. And since this candle is such a huge moment with good volumes, our stop loss is just a couple of paisa below the low of the candle. And we are still in the trade. If you have not moved this, you would still be in the trade. Price is going up, up, up. For example, the price has gone up. You could have moved your stop loss somewhere here. You would still be in the trade. Then the price has gone up, come up. You would have moved your your trailing stop loss here. You would still be in the trade. Price has gone up, and again your stop loss will be somewhere here. And then again, price has gone up. Now, price has gone up here. And if you didn't sell here, your stop loss would be here. And if your stop loss would be here, probably you've been taken out by now. So the things to watch out for is when you're going for a pullback trade is what sort of pattern are you taking? Is there a chart pattern? Is it a good candle? Whether there are good volumes? Whether the moving averages are sloping upwards? And you have to put a stop loss at an appropriate place so that you're not taken out very quickly through intraday volatility. And basically, if you are following these things and you are keeping a stop loss at the proper level, then you will be able to ride the trend. For riding a trend, you would probably need to trail your stop losses and don't keep 1:2. And if you're a swing trader, but since there are no resistances here, there's no point keeping a 1:2 because 1:2 is achieved here itself. And it would be a good trade. I'm not saying that it would not be a good trade if you went out 1:2. But if you didn't go, you can ride it for a long time. Up to you whether you're happy with 1:2. Since there are no resistances, there was no point keeping it here. Had there been a resistance somewhere here, then somewhere here or before 1:2, I would suggest keeping a target below the resistance, not at the resistance below, because sometimes price can go towards resistance and swing away, move back, or retrace even without touching this. So keep it below the resistance, but since it's the open target and price is at an all-time high, there was no need to keep a target. You would just trail your stop losses at respectable swing lows and looking at things. So I think this would have been a good trade. If you're still here, your trailing would have been taken out here. If not, and if you were very, very conservative, you would still be in the trade. But I think it's better to trail because here the price has gone below the 50 as well. So there's no point taking such a loss just because you want to ride momentum. It's better to get out and get in again because there are many opportunities to get in again. There are thousands of stocks and plenty of trades to take. Tomorrow is a new day. No point trying to ride and try to catch the highs. You'll end up with nothing and blowing up your account. If you learn something new, I uh, I want you to give me a like, and if you're not subscribed to my channel, do subscribe to my channel. Hit the bell notification for new videos. And if you have any questions or comments, please reply below. If you want me to make a video on a particular topic, do let me know. I'll try my best to provide you with that. I hope you had a good learning and good trading. And thank you for watching. And I'll see you in the next.